Hi, and welcome to the continuation of Global Sourcing Essentials. This section will provide insight on understanding U.S. customs. An individual may clear their own goods through Customs Border and Protection, otherwise known as CBP. A formal entry is required, though, if the shipment value is greater than $2,000. Formal entries have bond requirements and normally involve a customs broker for ease of clearance. An informal entry is allowed if the shipment value is less than $2,000. However, exceptions include textiles and other items with quotas. The third entry method is postal entry. This is a variant of an informal entry that is limited to shipments under $2,000 and can be less expensive. For example, a postal carrier such as USPS would collect your entry duties and deliver the product to your front door. U.S. Customs does not require an importer to obtain a permit to bring goods into the United States. However, some products do require a license or certification from a separate agency such as the USDA. Regardless, all import documents require an importer number, which is usually an IRS tax ID number or the Social Security number of the importer. An importer must declare the dutiable value of the merchandise. The dutiable value, or transaction value, is the actual value paid to the seller for the imported goods. Normally, this is cost of goods plus transportation cost plus insurance cost. Technically, total value will cover all cost on the invoice. When it comes to value, though, U.S. Customs always makes the final appraisal. The importer must determine the HS classification number of the product imported. The HS number will determine if there are duties and processing fees due. Remember that the duty varies by product and by country of origin. Products of NAFTA origin will more than likely receive preferential treatment versus products from Cuba. There are several rates of duty depending on the country of origin. General rates are reserved for countries that have normal trade relationships with the U.S. Special rates reflect lower tariffs or tariff exemptions and are for countries with trade treaties or special programs with the United States. Agreements such as NAFTA, the U.S.-Australian Free Trade Agreement, and CAFTA generally provide special rates. The rate of duty for Column 2 is reflective of U.S. foreign policy, as these rates are only applicable to Cuba and North Korea and are frequently much higher than general or special rates. Generally, U.S. importers must have a U.S. Customs surety bond. There are three parties to a basic importation surety or customs bond: the importer of record, Customs and Border Protection, and the insurance company insuring the bond. A surety bond is insurance that the importer will pay duties and fees on merchandise to the U.S. government. There are two types of surety bonds. Single entry bond is for a single customs transaction, and multiple entry bonds secure multiple transactions until canceled. The importer is responsible for assuring that imported products meet entry requirements. This includes proper markings, labels, permits, and other appropriate industry safety standards. Most imported products require that the country of origin be clearly labeled on the product in English. Bulk products also require appropriate markings. Imported goods will only enter U.S. commerce after having arrived at a U.S. port of entry and receiving clearance from customs. Entry does not mean when the goods arrive at a U.S. port. Entry is defined as when the documents are presented to customs for clearance. Goods not entered within 15 days of arrival at a port are considered abandoned and sent to a warehouse for storage. The importer is responsible for paying storage fees at the warehouse. After 6 months, abandoned goods are sold at auction. License or permits are generally required for the below items. Note, your item may require a permit or a license. Make sure to conduct your due diligence to inquire. To make a formal entry, the following documents are required: a bill of lading, an airway bill, or carrier certificate naming the consignee as evidence of the consignee's right to make entry. Also, a commercial invoice from the seller with the description and value of the goods. An entry manifest, known as Customs Form 7523, or an entry/immediate entry form, known as Form 3461. This is normally filed by a U.S. Customs broker automatically over the Automated Export System known as AES. This AES system is an online tool to help importers submit and file export information online. You will also be able